give me an idea of what the market's been doing. And it's going to give me a lot of assistance in trade management, because unless I understand the overall psychology, heck, I might think this thing's going to go to the moon if I didn't see that we've been topping out at these past levels. These past levels are going to be key support and resistance levels, aren't they? Amongst our psychological levels, amongst, say, Fibonacci and pivots and whatever other types of methodologies we use to identify support and resistance, past highs are probably some of the easiest ways to identify support and resistance, because this is where traders have told us the opinion shifts. This is where the sellers overpower the buyers at these peaks. Okay? So don't get too fancy about your, about your analysis. Sometimes good old-fashioned highs left over on the chart give me a good idea of where the market could possibly shift again. Now, there's no guarantee that just because I made a high here, I'm going to make a high here again. Obviously, the day could have had a completely different set of circumstances and a completely different set of fundamentals and data that was unique to that day, right? So you don't want to assume anything, but you have a pretty good idea that if prices are going to exhaust, that's a pretty good place that it might. It's all about possibility and probability, not about guarantee. You're just looking for those decision levels, right? You want to focus on the few levels on the chart that might actually be saying something about the ability for the chart to go higher or lower from there. Okay, so these end up becoming decision levels. All right. It's kind of like this. If you're living and dying with every single tick on your chart, which a lot of new traders do, I was guilty of that as well. You're living and dying with every single uptick and downtick. What you're essentially doing is making every little trade a decision level. And you're on DEFCON 5 all the time, and you will exhaust yourself, and you will miss the forest for the trees. Okay? What I'm talking about doing is narrowing down a huge price scale, okay, to specific levels that you're going to use with the tools that you're comfortable with to identify those levels that you think are more likely to tell you something about the ability for the market to continue or reverse. Simple as that. Okay? So again, the market memory of the 1-hour charts, 2 weeks or 10 trading days. When you get out to the 4-hour chart, you're going to end up with about 4 to 6 weeks. Okay? 4 to 6 weeks. Usually no less than 4. If you start creeping towards 6 weeks, maybe 8, you're on the upper end. Don't get too crazy. But 4 to 6 weeks is about right. That's fine. Okay? And then finally the daily. Well, anybody who's traded stocks and or futures like I did for many, many years before I actually started trading forex knows that 52-week highs and lows matter. The trends over the year matter. What happens over the past year on a daily chart is absolutely fair game. The market memory extends that far. I learned this lesson from IBM. It was interesting because IBM had, and this was years and years ago, IBM had a kind of a lackluster earnings and basically just gapped down like crazy. And everybody was getting so bearish, the Dow, and obviously IBM having a huge weighting on the Dow, it drug the Dow down all by itself about 100 points. And so I'm looking at my daily chart, and I've got my 1-year look back, and lo and behold, I see a gap, and a good-sized gap. It was probably like a $7 gap in IBM. Now, anybody who trades stocks and futures knows that if you've read any kind of book on technical analysis, you know gaps, which we really don't have to contend with in forex, but gaps are like windows. They like to be closed. So that means the open and close of the gap, the space left between, is kind of support and resistance. So if we close one day, whatever that price was, and the next day we gapped up higher, the previous session's close and the next day's gap open end up being a support and resistance level all on their own. And they like to be closed usually. The market likes to close gaps. And the bigger they are, the more obvious it is, and the more likely at some point they are to want to be closed. But we don't know how long it's going to take. So I see this gap, and I'm thinking to myself, you know what? People think that the sell-off is going to keep going down. But we've already sold off so dramatically, and IBM closed that gap. I bet this is where the buyers are going to start stepping in. I bet this is where the specialists are going to start buying. And sure enough, it took about maybe 30, 40 cents of wiggle, if I remember right. It's been a long time, but it was very little wiggle in price. And sure enough, when everyone was just so pessimistic, IBM's going to keep going and going and going, it started rallying after that gap close. And this gap close, and this is where it started clicking in my head. Not just the 52-week highs and lows being relevant, so you need that 1 year look back, but the price action within that year became very important. And this gap close really drove that home for me. So even on forex, I apply that because, again, the 52-week highs and lows in and of themselves is reason enough to keep a 1 year look back on your daily chart. But it's a lot of that minutia in there, those support and resistance levels that you'll find people have that memory of 1 year on a daily chart. So 1 year look back, again, I realized here I have about 14 months. No, actually closer to, yeah, maybe closer to 15, 16 months here. Anyway, I realize we may not be able to get exactly the 1 year, but keep at least 1 year on your view because you're going to need it. Highs and lows in the previous year matter. Okay? You hear about 125. By the way, you're going to hear a lot about 125 as we talked about on the Euro US dollar. Take a look at the lows back here, here, and here. There's a reason you're going to hear a lot about that 125. The market was down there before. See this? This is March of 2009. Okay? The market's been down here before. And that's where the market found support. Here's 2450.